Welcome to The Explainer. Today we are diving headfirst into the absolute minefield that is Pennsylvania's local income tax system. Seriously, it's a place where two completely separate legal universes are on a collision course, and it's creating a perfect storm for both taxpayers and their employers.
So to really get a handle on this, we're going to break it all down. First, we'll trace the history, going back almost 100 years to see where all this friction started. Then we'll get into the nitty-gritty of the traps waiting for commuters and the huge risks for companies. After that, we're jumping right onto the modern battlefield, remote work. And don't worry, we'll wrap it all up with a practical, strategic survival guide.
To really understand why this feels like an ambush today, we have to rewind. We've got to see how these two fundamentally different tax systems were created in the first place, and why they were pretty much destined to clash.
Okay, this timeline really tells the story. It all kicks off back in 1932 with the Sterling Act. This was a Depression-era Hail Mary that basically gave Philadelphia the unique power to tax income to save itself from bankruptcy. Then you jump forward to 1965 and you get the Local Tax Enabling Act, we'll call it Act 511, which lets all the suburban towns levy their own 1% earned income tax. And then, in 2008, Act 32 comes along to try and clean up the mess in the suburbs, consolidating everything into a more organized system. But, and this is the absolute key, it left Philadelphia and its special Sterling Act powers completely alone.
And this lays the conflict bare. It's so clear. Philadelphia's system, thanks to the Sterling Act, is all about the source of the income. They tax you based on where the work physically gets done. But the rest of the state, operating under Act 32, that's a residence-based system. They tax you based on where you live. This one single difference is the engine that drives this entire ambush.
All right, let's look at our first ambush scenario. This is how that fundamental conflict plays out for a regular person just trying to commute to work. It's a classic trap where, get this, you can do everything right and still find yourself in a whole lot of trouble.
So let's picture someone who lives in, say, Lower Merion Township but works in Center City, Philadelphia. Their employer withholds the Philly non-resident wage tax, which is 3.43%. Now, back home in Lower Merion, that person owes about 1% to their local town. But here's the thing. Act 511 says their hometown has to give them a full credit for the taxes they paid to Philly. Since that 3.43% paid to the city is way more than the 1% they owe locally, this super credit totally wipes out their local tax bill. The net tax they owe their hometown is zero, a big fat zero.
And here is exactly where the trap springs. You owe zero, right? So you think, why would I file a tax return? But the suburban tax collector, think of a private agency like Keystone, they're just running an automated data match. Their computer sees the wages you reported on your state return, but then it sees no local return was filed. And what does the system do? It doesn't assume you paid Philly. Nope. It assumes you paid nothing and automatically spits out a scary-looking delinquency notice for the full amount plus a nice helping of penalties and interest.
So listen, this is the most crucial point. Even when your tax liability is literally $0, you have got to file that local return. If you don't, the entire burden of proof shifts to you. Suddenly, you're the one who has to go back and prove you paid Philadelphia, all to clear up a notice that was generated just because you followed what seemed like basic common sense. That right there is the ambush. Okay, so let's flip the coin for a minute. It's not just individuals getting caught in this mess. These two dueling systems create a massive headache and, more importantly, direct financial liability for employers.
Under this Suburban Act 32 system, pretty much everything comes down to something called the Political Subdivision Code, or PSD Code. Just think of this 6-digit number as the routing number for every single dollar of local tax you withhold. The first 2 digits point to the tax collection district, the next 2 to the school district, and the last 2 to the town. If you get any part of that wrong, the money basically vanishes into a bureaucratic black hole. And this table just shows you what a mess it can be. Let's take that wrong TCD scenario. An employer messes up the code and sends the money to the wrong tax collector. Well, that collector has no idea who the employee is, while the correct collector sees that no payment has been made and boom, out goes another delinquency notice. And now the employee is stuck in the middle of a fight between two tax agencies. It's an absolute nightmare.
Now, the reason employers have to be so careful is because of Section 511 of Act 32, and the language here is brutal. It basically says the employer is on the hook for the tax payment, period, whether they actually withheld it from the employee or not. So a simple clerical error in payroll isn't just a mistake you can fix, it becomes a direct financial risk to the company's bottom line. They have to pay it.
All right, let's move on to the most modern, and I've got to say, the most contentious front in this tax war. We're talking about the battle over remote work, where Philadelphia is using a very old, very aggressive rule to tax the modern hybrid workforce.
And you know, this quote I saw on Reddit from a frustrated commuter trying to get a wage tax refund, it just perfectly sums up how people are feeling. There's this sense that the system is designed to be difficult, almost hoping you'll just give up.
So, the city's weapon here is called the convenience of the employer rule. And here's how it works. If you work for a Philly-based company, the city considers 100% of your income taxable by them, unless your employer requires you to work from your home in the suburbs. So if you have a hybrid schedule because it works better for you, for your work-life balance, well, too bad. As far as the city is concerned, it's as if you were sitting in that Philly office every single day.
And if you were hoping the courts might step in and say this is unfair, well, that hope pretty much died with the Zilka versus Tax Review Board case. The Pennsylvania Supreme Court sided with Philadelphia, and when the U.S. Supreme Court refused to even hear the appeal in early 2024, that was it. The decision cemented the city's broad powers under the Sterling Act, which means this convenience of the employer rule is here to stay, and remote workers have almost no legal way to fight it.
So after hearing all that, you're probably thinking, okay, this system is a mess. What can I actually do about it? Well, let's break down the essential strategies you need to know to protect yourself from getting ambushed.
For employers, it's all about having an ironclad process. You have to make residency verification a core part of your onboarding. Use that official CLGS 32-1 form and treat it with the same seriousness as a federal I-9. You have to validate every single PSD code using the state's official address lookup tool. And get your remote work policies in writing, clearly spelling out what's voluntary versus what's required. And the golden rule? To be safe, always withhold the higher of the two tax rates, the employee's home rate or the worksite rate.
Now, for taxpayers, survival is all about being proactive. Don't wait for the problem to find you. To avoid that data match trap, always file what I call a protective return with your local tax office, even if you owe zero. The second you get your W-2, look at Box 20. If that locality information is wrong, go to your employer immediately and get it fixed. And if you're going to try and claim a refund for remote workdays, you have to document everything. I mean everything. Daily logs, employer letters, the whole deal.
And this all leaves us with one big final question. As the very nature of work changes, as we become less tied to a physical office, is a tax system built entirely on physical location even sustainable? You have to wonder if this century of friction is finally going to reach a breaking point and force the lawmakers to come up with a real solution. But until that day comes, constant vigilance is your only real defense against Pennsylvania's local tax ambush.